Welcome back. Let's take you here now. Deputy President Paul Mashatile says the retirement fund industry is critical in helping South Africa to grow and develop. The government is keen to court the sector to invest particularly in infrastructure development to help bolster the country's future economic fortunes. The Deputy President was speaking at the two-day Batseta Retirement Fund Industry Winter Conference. Now, the conference comes just after National Treasury released a draft paper on the proposed two-part retirement system that will see employees allowed to tap on the retirement funds as early as next year. SABC News economics reporter Nompumelelo Siziba is at the conference in Sun City for us.
Thanks very much. We're here at the Batseta conference. Batseta represents the retirement fund industry. There's some 850 people in attendance here, and that they represent about 8 trillion rands worth of investments that are taking place in the pension fund industry. They're a very important sector of the community. Deputy President Paul Mashatile spoke earlier about how pivotal they are, particularly around the area of investing in infrastructure to actually help the South African economy grow and develop. I'm joined by one of the professionals who's in attendance at this conference. Her name is Sonia Saunderson. She's from the Eskom Pension Fund, and she's going to share some of the things that she can tell us about. Thank you so much, Sonia, for joining us. Now, one of the things that came out just before this conference was a detail from the National Treasury about the two-pot retirement system. Just tell us your thoughts around that. Do you think it's a good system? Is it going to be inconvenient for the retirement fund industry to administer it? Tell us more.
Thank you. Yes, I do think the two-pot system in its intent certainly is there to help pension funds and their members preserve more, which is certainly something that is a big challenge within South Africa. And from all the research I've seen, obviously not being close as an investment professional, but from all the research I've seen on the pension fund side, it does look like that's something that will certainly help South Africa. It will help us preserve more capital. We've got a shocking rate of people resigning their jobs and taking all of their money. And we actually need to provide the right vehicles and structures for them to be able to think about the long term. So I think it's very good from that perspective. The other perspective, of course, is that us managing the assets have an opportunity to now be more creative with those two pots, to make sure that you facilitate for liquidity in a particular pot. But with the other pot, you can actually take a much longer term view, and you can, as a fiduciary to members in the fund, make sure that you include more things that are illiquid, but that will actually, over the long term, match their liabilities and make sure that they get a decent return. So overall positive about it, but it certainly does require a little bit of scrambling for pension funds to be ready for this and to make sure all of our systems and our communication and our understanding of it is appropriate.
Now, coming to the Deputy President, Paul Mashatile, who was speaking as the keynote speaker this morning, he was saying that the industry, the pension fund industry, is pivotal, particularly when it comes to developing infrastructure in the country. What is the appetite by the pension fund industry to invest in infrastructure, especially when investors often talk about there being political uncertainty, worries about red tape and all of those things? Tell us more.
I think really pension funds are looking for the right investment opportunities. They are very interested in infrastructure, but there is a little bit of a skills deficit and an understanding deficit on pension fund side. Typically, it is a newer asset class, less published information, less understanding of what's behind it. I mean, there's layers of fees and there's layers of project specialization and all sorts of skills that typically don't reside within a pension fund. But as an asset class, it really does provide a lot of diversification benefits. It helps with a long-term liability perspective. It certainly helps in a world where we had lower returns to also get something that in a non-traditional diversified basis gives you more return. But the pipeline has been a little bit difficult to get into. And in South Africa, we do sit with a challenge that the larger pension funds typically do have the sizes to go into some of these bigger deals. Ourselves have had the fortunate opportunity to do so, but it's often the case that we can be much more effective as an industry if we pool assets together. You can risk share, you can diversify more between different deals. And I think there's a lot of goodwill and collaboration right now in the industry, and it was part of the conversation just now, that us as an industry are starting to talk more about the pivotal role that we need to play to make sure that we mobilize assets and that we make sure that at scale more assets are available for us to do these infrastructure opportunities. It also, of course, helps us to talk to government and the rest of the private sector more, and to make sure that we play a bit of that bridging role with the DFIs, with government, with fund managers in the market. And I think that's critical to get right before pension funds will truly be democratized to the point that they can actually go into these opportunities.